Welcome to another special edition of the 3 and 10 podcast. These discussions with investment or industry leaders are set apart from our regular Friday podcasts. They are both longer and more in depth. We hope you will enjoy, learn, and profit from this special edition of the 3 and 10 podcast. Hey, welcome to a special 3 and 10 podcast with my friend, Britt Harris. Britt has been the CEO of several pensions, endowments, foundations. He has helped manage and allocate many tens of billions of capital over more than 40 years. And he has developed a very interesting thesis that we're calling the 7 storms. So we're going to delve into this thesis and try and distill down what it means for investors and what the key takeaways of the thesis are. And I think for our audience, this will be more of an intermediate or longer term discussion, which will be refreshing compared to my usual weekly 8-minute 3 and 10 podcasts. So welcome, Britt. Thanks for being with us. And I'm going to try and set the stage here with question number 1, which is, what are the 7 storms and why do they matter for investors?
Yeah. So first of all, Scott, thank you for having me on the show. And I love watching your podcast. I'm a religious follower. And so, we were working together when in 2020, we, and I think several others came out and said, look, the era that we were in from 1980 to COVID, it was ending, and we're going to start a new era. And we didn't know exactly what that was going to be. If you remember right, we said, look, the 4 possibilities, one is a repeat of the 80 to 2020, and that was just not possible. The second was go to Japan, which is where we were headed. And since that's where we were headed, the country did everything in its power to make sure we didn't go there. And the other 2 were war and inflation. And so 5 years later, we've got a little bit of the story out. It's been war and inflation. But, while everybody's looking at, what's on the ground, somebody's got to kind of look out over the horizon. And in this new era, the first thing for folks who maybe watch, say, well, I don't know if I really believe it's a new era. Great economists, the best in the world, have gotten their economic forecasts wrong continually for the last 5 years. And these are not people who typically get things backwards. So there's some confusion that's going on, and people don't really know kind of what it is under the surface. And yet, for the most part, it's been positive. But here are the 7 storms. One of them is the debt limit. But Scott, people have worried about the debt since, I was just out of college. That's quite a long time ago.
Your whole career,
yeah.
People have worried about it. My whole career.
And I have, I've always thought it was a little bit, not silly because you always have to worry about debt, but it was a little bit disingenuous because, your debt can go up as long as the value of your enterprise also goes up. And interest rates are falling like a rock. And so our interest expense relative to the size of our GDP was not changing. So in 1980 it was 4%, 2020 was 4%, even though we had a lot more debt. But since then, our interest expense relative has shot up. So now, for what, in my opinion, for what it's worth, we're going to have to start worrying about this.
Yeah, mathematically, it's getting pretty daunting.
Yes.
Even the interest to carry this debt at $35 trillion is pretty daunting.
Yes, it is, but only if we can't grow fast enough. It's just like any company. If we can grow fast enough, it'll be fine. But if we can't, the consequences of having all that debt are way higher than they were when it was way lower. That's so. And when you look at the way that what's actually happening, I hate to say it, but it's entitlements are now growing fast. So we're taking money from defense, putting it in entitlements. So they're giving the money to you and I. and taking away from our soldiers. I'm not sure that's a great long-term strategy. So that's one. The second is, none of these are going to be.
We've got them up here on the
Yes,
slide.
yeah, I see them. So China's the second, and this is a pretty well-worn story, but China wants to be the number one country in the world. And I think people pretty well know that this is a 3-phase plan. And the second phase is over. The second phase, they literally said, move up the industrial curve, but don't threaten a leader. And we were a little bit asleep at the switch. And so, when we went to Alaska and they had we had that detente out there, and is when, in my opinion, China said, look, we're going to the third phase. And so now it's a competition, not a collaboration. It's like they moved into the industrial age first, like butlers, like we're here to make your tennis shoes. And then one day they walked into the kitchen armed with guns saying, no, we're taking over the house. And, so that's going to be a dominant thing. The third is climate change. So, and there's
I've spent a lot of time on this subject. Enormous amounts of time.
I spent an enormous amount of time on it. And it is to get people into position where we can do something about it, is going to have to get people who are overstating the case to be more realistic, and people who are ignoring the case to be more realistic. So the truth is that right now, the good thing eventually is a bad thing. And so hydrocarbons the economic prosperity of mankind has skyrocketed because of hydrocarbons. Up until hydrocarbons were discovered, the world grew at 0.1%. And everybody was stuck in the feudal system. It was, agriculture, agrarian. Hydrocarbons since then, those who had access to them we have the lifestyle we have now. So unless you want to go back to the Stone Age, people did not go more than 50 miles from their home. Not more than 50 miles from their home until this happened in their entire life. Now you fly to Japan and back in a single day because you're crazy. But you can do it. And so the plan that we have to have there is going to have to be reasonable. It's going to have to be effective, meaning practical. If the plan that the Paris Accord has is not practical, it's going to have to be compassionate, because there still have 1 billion people out in the world that are energy insecure. And if you go their direction, you're just going to, they're going to be cast into hell for the rest of they're not going to emerge. And it has to be affordable. And the McKinsey estimate, which people forget to tell you, is $275 trillion. That's with a T, 275 trillion. The U.S. is the biggest country in the world,
Which is like 5 years of global GDP.
Yes, and it's equal to 1/2 of global profits. It's 10 times the size of the United States. It's 3 times the size of the entire world over a period of time. It has to be affordable. So, but it also has to be dealt with. But until we get serious and not overstating the case or ignoring it, which is where we are now, and Americans are a little bit at fault here because we're not in the game, because we don't believe in the Paris Accord, which I don't believe in, but we do need to do quite a bit.
And we need global cooperation. India is going to participate. China, that's just going to be.
Yes, that's the thing.
Well, there's a free riding problem.
Yes, absolutely.
We could go on about that one. But the next one is the moment.
AI,
Big thing of the moment.
Yeah. So here's the way I think about AI. We've finished the period of time when technology is replacing physical labor. Like you're buff, but you pay. Who in the world would say, honey, let's wait for dinner till I work out after you got home from work, or I'm going to go work out before I go to work? I mean, that's just inconceivable. But physical labor for, the developed countries is now passé. You pay, but so that's over for us. But now we're in the era of technology replacing mental labor. And that's a completely different thing. And it's going to happen way faster than I think people expect. And the central question was, the questions were, is this technology that we're going to produce going to be primarily to serve mankind, or is it going to be to replace mankind? Subordinate mankind. And just on that, as we talked about earlier, Scott, there's not going to be somebody go out and say, I want to destroy all of humanity with technology. This is not a James Bond movie, but just one decision at a time, where you even see it today. I have a friend who runs a big company, and I asked him how things were going. He said they were going great. I said, well, what's going great? And he said, I just gave about 1,000 employees new technology, and it's going to double or triple their productivity. Fantastic. And I laid off 1,000 employees. So the first step, it's not that there's more work to do. The first step in technology is less people can do the work that there is to do. And so, how this evolves with regard to this income inequality and all those kind of things, I think it's more likely to increase income inequality than to reduce it.
I agree with that.
Now, so with that said, even I'm a relic. I'm using some of these large language models already, and you can see, what they can do for you.
Incredible burst of productivity.
So, so two more, and then we'll get to, obviously we're going into the world order. The rules base is over, and now it's basically every man and woman for themselves. And I think when you look and you see what's happening with us going, all of a sudden we want Canada, Greenland, Venezuela, Cuba, probably, this is all just happening out of the blue. I mean, why now? Because I feel like China and the U.S. are kind of saying, along this path, you take your side, we'll take our side to a certain extent. And in this new world, and it relates to the last one, which is the millennials, we have new leadership is coming in. And the thing to realize is, like I was talking to a friend yesterday who's about my age, and when we're talking about Iran, we're talking about what happened in 1980, the hostage crisis, and we were just talking about the Ross Perot folks, and we remember that. The millennials weren't there when that occurred. We also remember World War II. They weren't there. They didn't know anyone. Their grandparents were. So you put this up so this is kind of fun.
This is a good slide.
So here, when I got out of college, and we had pins on said whip inflation now, and we did, and that was a 40-year process. And then when Powell said very quietly, you had to have been there in 80 to remember whip inflation. Now, when he said, I'm going to let inflation run, to me, that was, all right, it closed the door on this era. Inflation, you saw that inflation goes from 14 to 2. And of course, that meant the multiple just exploded upwards. And the S&P started, when I came out of college, the S&P was 102. So I say, I've seen everything except for the first 102. But just think the price of oil in 1980 was $35, and it was $35 a couple of years ago. And yet we're energy independent, which I forgot to mention. That's a miracle. And yet the S&P, is up. Of course now it's way higher than this. And then look at energy independence. Here's one. Shareholder value versus stakeholder value is a result of the concentration of assets into the hands of three funds.
Passive.
Passive funds.
Yeah.
So now they're a little more than 50% of the total. So BlackRock, State Street, and Vanguard, are collectively about 20% of the shareholders of almost every company. So, and these are passive portfolios, so they're not going to walk into the companies and say, they're not going to be able to lower their prices anymore. So now how do they get more customers? They get on the stakeholder side and walk into the business roundtable and start ordering them around. That's a millennial thing also. Just a couple more here, and I know you don't want to go through all of them, but we should mention that now that we have companies now that are not companies, they are countries. We have companies now that are bigger than countries. NVIDIA is bigger than England. What does that even mean? And NVIDIA is all global. Take these big countries. Are they U.S. companies or are they global companies? 50% of their profits are coming from outside the U.S., but they're inside the U.S. So, and this level of concentration in fewer and fewer hands, I think is.
Do you think it's with us to stay, the level of concentration, or do you think it will dissipate over?
Normally you would say dissipate. Historically, you would say somebody's going to come along, some, David and Goliath kind of deal, and knock them off. And, if you were to say, ask me, is NVIDIA and Google and Amazon, would they still be relevant 50 years from now? I say no. But we've never had a situation where these companies got this big and this powerful. And remember when Standard Oil did this in the 1800s and then early 1900s, Congress hauled them up there and cut them into a bunch of different companies. They tried to do that with Microsoft, but that's really hard to do now because they just go to a different country. So I think the chances that it will be more and more countries will increase. It's higher than normal.
Britt, when we roll all these storms up into one, it forms something called either a new world order or a new regime. And I was in Washington last week at the IMF meetings and a great conference there. And that was the takeaway. That was one of the key takeaways, is that we don't know where we are, but we know we're in a new territory as investors. And how should we think about it? How should we think about allocating capital in this new world order? Surely it's got to be different than the last 40 or 50 years.
Yes.
Or maybe not.
Well, it is. Everything is always different and always the same. So all these things are different, and there's more of them, and they seem larger and they seem more transformative than normal. But at the end of the day, whatever they do, they still come out with how much GDP growth do you get and how much inflation do you have. And that environment sets the pace for what kind of returns you're going to get. So even though this is super important in terms of that human level, it's still going to come down to what kind of economy does it produce. And so unless you're going to say that economic activity is going to decline and inflation is going to rise, which is what some people are saying, then the chances that we can stay in an economic condition that's reasonable is not as far-fetched as you might think. But the chance that we could get knocked out of that, so that region is also higher. So in our models, for instance, you normally have 60% of the time you're in kind of good economic conditions, and 20% you're in deflation and 20% you're in reflation. The last 40 years, we've been 80% in good times and 15% in deflation, maybe a little bit, in the reflation. I think what's going to happen is we're going to be in that middle area less.
Yeah.
And we're going to probably be in the reflationary more because we're going to let inflation run. At the same time,
which partly ties into storm number 2, which was the massive debt.
Yeah.
So we have to run a higher
Yeah.
inflation.
Yeah. And so, yes. So, yeah. So but one of the things that's helped me is to understand that when there's a big problem that you see, the world does not just stand there and let it happen. Every time this happens, and COVID, you get to a situation that says, forget all the normal policies, forget everything that's
Response.
do whatever it takes for as long as it takes, no matter the cost. And because of that long interest rate ride that we had to go down the hill, we had a lot of firepower to do things like that. Now that we're sort of at the bottom of the hill, the Fed, as long as we keep a 500, short-term rates at 5% or so, we have 500 basis points to fire at the thing. But, we don't have 1,000, we don't have 1,500, like we did before. So the Fed is not just, there's certain things you just know. The Fed is not going to be able to be as supportive as they were before. And, that it by itself, at some point we'll have to probably increase, we're going to have to get, at some point they're not going to, come in and save the day. Maybe it's now. But
so I know you've thought about the new world order for investors and how we need to approach it, thinking 5-10 years out, not today, but over the next decade. Is it going to require more flexibility, more innovation by portfolio managers, more diversification, more cash?
yeah,
How do you manage some big money in your career? How, if you were back at TRS with 200 billion, how would you be thinking about the next decade?
So number one is, in the next decade, I don't think, we're not going to have the disinflationary theme is not going to be as prevalent as it was before. And so the reflationary, so on the one hand, the reflationary, will be more important. So let's just say, and so you're going to have hard assets having more of a bid. And let's just say one example that we talked from one of the storms. When people are going from hydrocarbons to renewables, you're going off of, oil and coal, but you're going on to other minerals. And one of the,
for example.
yes. And even the people who are enthusiastic about the plan will tell you, we don't have the minerals to get us from A to B. It's funny because we're going to fly this plane with the whole world on it, but we don't have enough fuel to get halfway there. And we'll figure out how to get the rest of the fuel, later on. So that's going to put a lot of pressure on that kind of thing. But at the same time, if AI, if AI causes the transformation of society where we have fewer workers, but the workers we have are more productive, and everybody's working from home, and the traffic patterns and flight patterns and all that kind of stuff is going to be affected. It's just if you get super intelligence, I know you're already super intelligent. But there's this thing out there.
Chip embedded in my head.
Well, just think there's a thing out there that we're being told like super intelligent, that we who are less intelligent are going to create things that are super intelligent, and then we're going to control them because we're going to train them to like us. Well, what could possibly go wrong? I've got 4 kids, and I try to train them all to be very friendly all the time, and every once in a while, they get out of line. So we're walking a very
well, and on the other side of that, maybe artificial intelligence or super intelligence, AGI, whatever we want to call it, can help us solve the climate crisis.
Yes.
And the debt crisis and some of these things.
Yeah, it's amazing.
I mean, it's hopeful.
Yeah, well, if we get one thing, the right kind of fusion, then problem solved. It's so for climate change to turn out to be, an existential thing, will mean that humanity at large was just totally unable to stop it with everything that we're going to do to try to throw at it. Some people think we should do more and less, but it's going to be a Herculean effort there. And probably, I teach a class. And so when I told the class, we don't have the minerals, to get there. So you're buying into a plan that's going to drop you off in the middle of the Atlantic. They said something to me that's pretty practical. Said, if you're going to spend $275 trillion on it, we're probably going to come with a solution.
Yes, I would think so.
Remember also, I told you this before, I'm just old enough to sort of sat at John Templeton's knee, and he said something that's always helped me. Pessimists always sound smarter, but optimists live in bigger houses.
So I like that. We should all keep that in mind. And Britt, when you're thinking about these 7, we talked about the long term, the next 10 years. Of the 7, which one concerns you the most today?
Probably the government part of it,
The debt.
Well, not the debt so much, but just what we're also having, and I didn't mention this, but in the change in the world order, you go from, there's also an era where business is favored, and there's an era where government's in favor, and then business and then government. So part of the last year when Reagan came in, remember, kind of government is the problem, business is the solution. That's not the consensus anymore. Particularly after we went through COVID, you couldn't save me in my job. They paid me more than you were paying me. So now we're going into a world where government is going to be in charge.
They are the solution.
And thinking they're the solution, and business will have to, bend the knee. Now, when you have these huge corporations that are actually companies, we'll hopefully fight against that. But,
It's hard to imagine a higher return environment if the government is in charge rather than business. It seems like that's going to be a big headwind for profitability and return.
Yeah, because, government is not, government is a syndrome that is not about profit making. It's about delivering services. And if you ever read the book, Systems and Syndromes, Economic and Moral Foundation of Business and Politics by Jane Jacobs, the dollar spent with the government is way less productive than the dollar spent in the public sector, but it has maybe a better purpose. So, and you're getting to a place where, I just think with COVID, there's some things we have to watch out for. In COVID, it's kind of like, who's going to decide, who can go out and who can't go out? Who's good and who's bad? And for a while, it was going to, like the government was going to make that determination. That's a very, very scary road to go down.
Dystopian.
Yeah.
The future if that takes place.
Yeah. And this is a strange story, but I got stopped by a policeman the other day. And he said that somebody had reported me driving recklessly. I'm not a very good driver, so it's probably true. But the fact that a citizen could report on another citizen, and the police, he said, it's now a law, we have to stop you. It's scary. I said, so that pickup truck that just went by, I was going to say something about that.
That's kind of concerning. I must agree. Well, so we've got 7 storms. Do you worry about the possibility of them hitting simultaneously, or is that an unrealistic fear? Do you think they'll play out one by one, or is there potential in 2030 that maybe they all create a maelstrom and a real problem?
It's funny you say 2030, because there is, I don't know, but there's a good likelihood that people, I know right now we're considering that we might go to war with China in 2030, that exact year. We're hopefully trying to avoid it, but in the process of you have to prepare for it, even though you're trying to avoid it. And so You know, and right now we have a problem with our procurement. So what I mean by that is our ability to get our innovations onto the battlefield is super slow.
And our ability to manufacture armaments is really slow.
Relative to China. And
We
so,
build 5 battleships or commercial ships a year in this country, and they build 1,000.
yeah. And so what that means is that we're here and they're here, but because as time passes, you know, they're doing things faster than we are. And by 2030, some people project that they'll have roughly the same, and then they'll pass us. Now, with all that being said, we always just, you know, underappreciate what we can do and overappreciate what other people can
In
do.
the first Cold War, we really underappreciate what we could.
Yeah. And the truth is China has gone backwards relative to the U.S. in the last, you know, 5, 6, 7 years. You know, that advance they were making. Yeah, in terms of when they're going to take over, when they'll be larger, you know, has been pushed further and further back. And some people say it might be never. And China's got a huge problem with their people. I mean, it's inconceivable that you can go from 1.4 billion people to 800 million people, you know, in the next, you know, 70 years or whatever it is. And we have that issue.
And be the leading country.
Yeah. So what is that? It's for that to occur and for them to be the leading country, their productivity has to soar.
They have to replace people with robots and technology.
You're talking about their productivity is going to have to go up probably 4 times you know, and so, you know, of course, and if you know, the fact that they're being forced to get way more productive really quickly, not just because they're staying even, but because we're actually dropping bodies, is going to force the rest of the world to do the same. And so you're probably looking at this unbelievable period of innovation. I was told by a scientist that first of all, he said to understand these kind of things, you have to understand that technology is and always will be. And he told me that, it took me a minute. What he's saying is you can't stop it. You know, you can't stop it. And so you just have to be in front of it. And being in front of it is going to be very difficult. So with our children, you know, we're going to have to just pound into them that you have to be a higher level thinker. You know, if you're not, you're just going to be subsumed. And by higher level, I don't mean go to, you know, elite schools. I mean, you're going to have to be an independent thinker because the pressure against you to be a consensus thinker is just going to rise, you know, astronomically faster. So he said the amount of change that's occurred in the last 40 years will now occur in the next 20 years. That's
The rate of change will double.
yeah. I mean,
Well, the great investors that I have come across in my career have almost all been independent thinkers.
you have to be, right?
Have to be, otherwise you get the index return. If you
Yeah. But you can't be so independent that you think everything that everybody believes is wrong.
Yeah, that can lead to huge underperformance. So a lot of great thoughts here, and I'm just for the audience, try to crystallize it in a few minutes here. What should we take away from all your work on these storms? And
I think the thing we need to take away is you need to strap up, you know, in sort of Texas terminology, you know, you need to, our football team get a suit up here because we're going to be going into these storms. And it's, you know, it's not that we don't be afraid of the storms, just be aware that these things are going to come and increase your contingency planning, you know, for just a simple one, forget about the storms. We know that we're going to have bear markets. We just don't know when they're going to happen. So anybody that's listening to this, or you or I, who is not prepared for a bear market, shame on us, because we know they're going to happen. You know, these things that we've talked about here, they're going to happen. These are not things that, you know, it's kind of 50-50. They're out of the box. They're going to happen. But at the end of the day, it's just, nothing's new under the sun. It just seems like there's more things that are not new under the sun all of a sudden.
And I'd make the case that these storms are probably going to produce tremendous opportunity
Oh, yeah, of course.
for flexible, innovative, forward-thinking investors.
Yeah, you're not. It's going to be. It's going to be. You're going to probably going to have to ride this new wave. That's because we're going to leave. As we transition, there's going to be a new type of company, a new way of operating. That if you're on that wave, then it's going to be great. But if you're not, it's going to be. I think the difference between being put on it and off it is going to be larger than it has been in the past. Going back to the China situation, if China achieves their goal to be number one, autocracies in the world are going to soar.
When democracies will wither.
Will fall. Because when we became number one, autocracies fell and democracies rose. And people, we Americans take this for granted. One of the things that we have to do with ourselves and with our children is wake up to what all this means. And that, rather than sitting here fighting each other, let's get out there and fight productively.
So that's a great way to end it. And yeah, the enemy is not necessarily here. It's on the outside. And well, this has been a great discussion. And since I have you here and just in recognition of your great career and not just great performance, but durability of career, doing over 40 years in maybe one of the world's toughest industries that tends to discard people by the wayside very quickly and easily.
Yeah.
You were a survivor and a prosperer in this financial services industry for decades. What was the most important lesson that you took away or you take away from your long career?
So that's the kind of questions you can have like 100 answers to, but just the couple that come to mind, first of all is somebody told me really early on that, emotional stability is the most important thing. And that there'll be periods of time when you're performing really well and people will be telling you, you're great and you're a genius. And then there'll be other times when you're not performing, you're performing really poorly and people telling you you're an idiot. And it's easy to believe both at the time. And you just have to remember that neither of them are true. And whether it's green or red should not affect how you treat your family. Or your children or your mood. The other is a statement that a guy there's a Catholic saint named Thomas Merton. And I'm not Catholic, but he's really kind of inspirational writer. So I'm reading along and it says, to become a saint means to become your true self. And, I thought to become a saint meant, become Mother Teresa, which obviously that's not me. But to become a saint means to become your true self. To become something to miraculous things or incredible things can happen means you need to be who you are. And one of the things that particularly on Wall Street, we can have a false view of what we need to do to be successful. And to put in this terminology, that we need to give up our true self and take on our false self because we think that our true self, which is more spiritual, is not going to be as successful in the secular world. Yeah. And that's the biggest mistake people make because when you decide to try to be somebody else that you're not, then you lose the power that you have. So be your true self.
Well, I want to thank our audience and thank you, Britt Harris, for your time.
It's great to be with you.
Sharing your wisdom with us today. And
My pleasure.
we'll end it there.
All right. Thank you, Scott.
All right.
The information in this podcast is educational and general in nature and does not take into consideration your personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategy or investment may be suitable for you, consult the appropriate qualified professional before making any final decision.